You probably must have been seeing or hearing a lot of flash news about this young man, and you keep wondering who this man behind the headlines is. You're eager to catch up with the details. Well, you just stumbled onto the right video. So sit back and let's dive into the details. Who is Sam Bankman-Fried, the FTX ex-CEO who lost billions in crypto? Samuel Bankman-Fried, known as SBF, is an American entrepreneur, investor, founder, and former CEO of the cryptocurrency exchange FTX USA and the cryptocurrency trading firm Alameda Research, whose net worth dropped by about 90% in a single day. In November 2022, FTX, Bankman-Fried's cryptocurrency exchange, experienced a huge financial crash that led the company to file for bankruptcy. That same month, anonymous sources revealed the cause of the company's financial crisis to the Wall Street Journal. It was discovered that FTX had lent more than half of its customers' funds to its sister company, Alameda Research, a wrong decision that eventually led to the downfall of the company. But what went wrong? Didn't he know better? Let's dig a little into his background. Sam Bankman-Fried was born on March 6, 1992, on the Stanford University campus in California, into a Jewish family. His parents, Barbara Fried and Joseph Bankman, are both professors at Stanford Law School. His aunt, Linda P. Fried, is the current dean of Columbia University Mailman School of Public Health. Likewise, his brother, Gabriel Bankman-Fried, was once a Wall Street trader. Bankman-Fried attended high school at Crystal Springs Upland School in Hillsborough, California, and later went on to Massachusetts Institute of Technology from 2010 to 2014. In 2014, he graduated with a bachelor's degree in physics and a minor in mathematics. Obviously, he's not from a poor background, but grew up in a well-educated environment. But how come he made a mess of his fortune at his peak? In a recent interview with his mother, when he was in 7th or 8th grade, she noticed he wasn't into school things, she told Yahoo. After obtaining his bachelor's degree, SBF eventually made his way into the financial world. During his time at MIT, or the Massachusetts Institute of Technology, he interned at Jane Street Capital, a prominent firm where he later worked as a full-time staff. But by 2017, he went out on his own, starting Alameda Research, a trading company. Then he founded FTX in 2019. According to Bloomberg Business News, his fortune grew exponentially, reaching $26 billion at a point. What was he doing? What were the trading strategies he used that could have earned him that much in such a short time? How it all started. In November 2017, Sam Bankman-Fried co-founded Alameda Research as a quantitative trading firm after he left his job at Jane Street Capital. In an interview with Bankman back in 2021, he said that the term research was included in the company's name to avoid scrutiny. Here were his exact words. If you named your company like, "We do cryptocurrency, Bitcoin, arbitrage, multinational stuff," no one's going to give you a bank account. But everyone wants a research institute. Wahoo, great idea. In January 2018, SBF discovered a way to take advantage of the spread between American and Japanese Bitcoin prices, as at then, the Japanese price was lower. As New York Magazine explained, he cobbled together a chain of intermediaries, including obscure banks in rural Japan, to take advantage of the extremely wide price discrepancy. The company earned about $20 million from the arbitrage opportunity. What a smart move. Later in 2018, he moved the firm's headquarters to Hong Kong, where the regulatory climate is more favorable. He subsequently founded FTX, a platform for crypto investors to purchase, sell, and hold digital assets, along with a small group of traders, including Caroline Ellison, a former trader at the financial firm Jane Street. FTX and Alameda were intimately connected. Alameda traded extensively on the FTX platform, which meant that it occasionally gained when FTX customers lose money, a situation that critics deemed to be a conflict of interest. According to public data reviewed by the Wall Street Journal, between early 2021 and March 2022, Alameda Research amassed $60 million worth of crypto tokens ahead of FTX intending to list them on the Ethereum blockchain. Unfortunately, Alameda Research suffered a series of losses in May and June 2022, and in an attempt to cover up for this, FTX lent the trading firm more than half of its customers' funds. Still, the research firm continues to incur significant losses. Unfortunately, FTX was already on the verge of bankruptcy due to a poor decision to give out its funds. Amid the ongoing financial crisis, SBF was compelled to resign as the CEO of his firm. In August 2022, the co-CEO of Alameda Research, Sam Trabucco, resigned from his job as well, and Caroline Ellison became the firm's sole CEO. On the 8th of November 2022, Following a liquidity crisis at FTX, a large cryptocurrency exchange, Binance declared its intention to buy out FTX. Upon critical evaluation, though, it was discovered that the value of Alameda had been greatly affected and was estimated to have dropped by more than 90% following the public disclosure of its problems. But that wasn't all. As of October 2022, Bankman-Fried's net worth was projected to be $10.5 billion, but it dropped drastically to around $1 billion following the crisis and tentative acquisition deal on November 8, 2022, the largest one-day drop in the index's history, according to the Bloomberg Billionaires Index. The following day, the 9th of November, the Wall Street Journal reported that Binance was pulling out of the FTX acquisition deal. Binance cited FTX's mishandling of customer funds, as well as the ongoing investigations of the company, as the reasons the firm would not pursue the deal. That same day, Alameda's website was taken down. The next day, Bankman-Fried stated that Alameda Research was winding down trading and would close. Alameda Research, along with FTX and more than 130 affiliated entities, filed for Chapter 11 bankruptcy in November 2022. Here are a few fun facts about the young ex-CEO you never knew. Before Bankman-Fried's wealth disappeared in November 2022, Bankman-Fried was a major donor to Democratic Party candidates. He was the second largest individual donor to Joe Biden in the 2020 presidential election, personally donating $5.2 million. He also donated $40 million, mostly to Democratic candidates during the 2022 U.S. midterm elections. He also has a lot of celebrity connections. FTX has had celebrities take equity stakes in the company or have them serve as its global ambassadors. A few of them are football legend Tom Brady and his ex-wife model Gisele Bündchen, tennis star Naomi Osaka, and basketball great Stephen Curry. The California native never really cared for school, and he likes his Oreo cookies. Probably this could explain his laxity towards continuous learning and acquiring the necessary knowledge about business, investing, risk, and financial management. Finally, according to the Bloomberg Billionaires Index, Bankman-Fried has no substantial or material wealth, meaning he only had virtual assets. Mr. Bankman-Fried has spoken relatively little in public ever since, except for a few tweets, notes to staff, and infrequent texts to reporters. In a recent interview, he revealed his regrets about FTX's downfall. However, he was reluctant in providing a cogent explanation to any major questions he's been asked. Recently, the 30-year-old entrepreneur tweeted, "I effed up and should have done better." He further says in an interview that he feels remorse toward those adversely impacted by FTX's financial hardships. He took the blame and said he was sorry. Bankman-Fried has since been on a recent media blitz, as he's been accused of fraud and mismanagement of funds. Last week, he spoke to Good Morning America from his $30 million Bohemian penthouse. During the interview, he said that he wasn't trying to manage risk at FTX. "I think that there is something even deeper wrong there, which is I wasn't even trying. Like I wasn't spending any time or effort trying to manage risk on FTX," he told GMA. He added that if he spent an hour a day thinking about risk management, then his company would not have imploded. But he tweeted on Sunday that he would testify before the House Financial Services Committee after he finished learning and reviewing the events that led to the spectacular collapse of his cryptocurrency exchange. That doesn't sound like a good response from a leader. What do you think, viewers? Whenever he's being pressed for details about what actually caused the whole thing to blow up, Bankman-Fried's answer wasn't about taking responsibility at all. All he says is, "I don't have all the details there." That's disturbing. A leader ought to be accountable for what he leads. Could there be more to this? Could it be that Bankman-Fried and his group of crypto masterminds had no idea what they were doing and should have never taken anyone's money? Or Bankman-Fried knew exactly what he was doing and the whole thing was a fraud? Either way, "I don't have all the details there" is not an acceptable answer from a CEO, especially when the question is, what happened to your customers' money? Although any company could experience financial crisis and file for bankruptcy, various proofs and allegations keep popping up against SBF, pointing to a single direction: mismanagement of funds. Former FTX employees disclosed the exorbitant spending Bankman-Fried and his executives undertook with the company's funds, which included ultra-expensive massage sessions and even the use of private jets in delivering Amazon orders to their luxury Bahamas office. There were also massive food stipends for each of the staff, up to the tune of about $200 a day, according to the Financial Times. The company collapsed last month amid reports that it owes billions of dollars to customers and is in debt to Jimmy Buffett's Margaritaville Beach Resort for more than $55,000. Even the beach resort's staff disclosed to Bloomberg how employees working with FTX entities would stay at the resort for months on end in roughly 20 different suites, all booked under Alameda's name. On weekdays, they said, a shuttle would pick the employees up from the hotel in the morning and drop them back off at the end of the day, generally in the late afternoon or early evening. Wow, what a lifestyle! The U.S. House Financial Services Committee plans to hold a hearing in December to investigate the collapse of FTX and expects to hear from the companies and individuals involved, including the founder and CEO, Bankman-Fried. With our fingers crossed, we're looking forward to see what happens next. Undoubtedly, the collapse of Sam Bankman-Fried's $32 billion crypto empire has been one of the most devastating incidents in the history of cryptocurrency, and its impact can't be trivialized. It can be felt throughout the industry, instilling widespread fear and skepticism among crypto traders. We'll wrap up today's video at this point. Over to you, viewers. What do you think of this adventurous ex-CEO? What can you also learn from his lifestyle and personality? Please do share your opinion with us in the comment section below. I'm looking forward to reading them all. With that, thanks for watching, and we'll see you next time.